The mentality and having the mental acuity kind of and form is really amongst the biggest things. Like I can teach anyone how to look for a chart setup, but the hardest thing to do is to get your mind conditioned to not get swayed, because everything about the markets function on a masses basis, meaning that the markets will run up and get the most people long possible before they reverse. And they'll wait and wait and wait until everyone is long, and then they'll sell off, and vice versa. On the other side, they'll get everyone in that panic, crazy state, and that will be the bottom. So by working on your emotional control and your kind of discipline, you have to get to a point where you recognize and don't get swayed by those type of things. Otherwise, you end up being part of the crowd that gets long, you buy Bitcoin at 69,000 or 68,000 right before the reversal. And that was one of the beautiful things about it, is I was able to look at the hysteria behind Bitcoin, not only using the technicals to project a $20,000 target, but also noticing that the hype was at a level that told me the end was at hand. And that was such an important thing for avoiding being long Bitcoin, but in fact also being short Bitcoin on the way down. Hysteria is kind of right now, it's kind of neutral, believe it or not. So we've seen a bounce in Bitcoin where you have some people starting to call, okay, the 17,500 level on Bitcoin was the low. And then you have other people still saying, oh, well, I still think there's more downside, like myself. The charts still tell me there's more downside, but you're not seeing an overwhelmingly crazy amount of bearish, hysterical sentiment, which to me is an indicator that we haven't fully bottomed yet. You have to get to a point, whether it's the stock market, commodities, or crypto, you have to get to that crazy state of panic, of absolute insanity, fear, for it to finally bottom out. And we just haven't seen that in crypto yet. So one of the things you want to look for is you want to look for people that are just throwing in the towel because it's too painful, right? So certainly coming down to 20,000, you had some of that, and even piercing 20,000 on Bitcoin, but you didn't get people saying, you know what, Bitcoin's not going to be around anymore. It's going away. It's going to fail. You need to see that type of fear come in, where people that were long at 68, 69,000 now are saying, oh, it's a goner. It's not going to survive. And that's where the low will be put in, when you get that absolute kind of crazed, kind of irrational panic. Just like it was irrational at the highs, you look for that irrationality at the lows as well. So here, let me show my charts here and we'll take a look. So basically, you're right. I mean, first of all, the dollar has just had one of the most remarkable rallies, even just this year alone, to go from about 95 bucks all the way to 112, 111 on the Dixie. I mean, percentage-wise, historically, that almost never happens, where a stable, so-called stable currency like the dollar would gain that much traction. But one of the things you can see is it has a very clear defined trend line right here. So you can see we kind of topped out right here. We've pulled back now, and we've seen the stock market rally. We've seen cryptocurrency rally. So I think the most important thing about the dollar is to recognize that a weaker dollar right now is exactly what risk-on investors want. They want to see that dollar coming in, because what it indicates is that the Fed may not be as aggressive in terms of hiking rates. It all kind of trickles through the Federal Reserve and what expectations are for the next policy meeting and the policy meetings after that. So with the dollar pulling back, we've seen the response, and I could show you the SPX chart here, which is the S&P 500. You can see it coordinates perfectly with this move up right here. So S&P up when the dollar pulls back, and same thing with Bitcoin. If you look at Bitcoin, BTC here, you can see that this rally on Bitcoin coordinated perfectly with that pullback in the dollar as well. So again, dollar down, assets prices go up. We know we get the CPI data coming out here shortly, and then also we'll get the Federal Reserve statement later in September as well. So to me, it's not going to last that much longer. I think the markets are going to see the dollar snap back a little bit, but right now it's party on.
Right. I mean,
so I think the dollar has a few things working towards it, or working for it. Number one, the Federal Reserve has talked the most hawkish game. We saw Jackson Hole's comments from Jerome Powell. We've seen, him coming out continually and just being super, super hawkish. We're going to raise interest rates as much as we need to. And what that does is it strengthens the dollar, because as expectations for higher interest rates. So basically when interest rates go up, it draws money out of the economy, right? So it sucks money out. So you have less dollars in the economy to be invested or to just in general be used. And that creates a stronger, it's a supply demand basic mentality of less dollars and equal demand means the price of the dollar must go up. Then you also have the scenarios where you have the risk of Russia with Ukraine, these global geopolitical issues, which historically have had investors rushing into the dollar for safety. So there's that added aspect as well. And then you also have the kind of the economic aspects where we know that Europe is struggling. Their economy is likely going into recession. We have other areas of the world, maybe the whole world, heading towards a global recession. And same thing, it makes people want to buy the dollar for safety. So, everyone talked, and this is crazy because in 2021, it was all about the demise of the dollar. The dollar's going to collapse. That's why Bitcoin's going to keep going to 100 to 200 to 300, right? 1,000, obviously. But in reality, the dollar has been the best performing asset out there in spite of all that chatter. And again, that's just basically because the dollar is still king on the block. You have yen, they're printing just as much, if not more. Europe is the same thing. The dollar is still the reserve currency of the world. Eventually, I do think Bitcoin becomes a stable store of money, of a way to diversify out of fiat currencies, right? But we just have to recognize, if anything, I would say it's the princess, right? It's super young. What is it, 2022? So you have a 13-year-old that eventually will grow into the queen or the king, but it's just too immature at this point. You just got to give it time. It will grow. I think ETH saw a lot of the upside gains, over the last month, and it's kind of pulled back a little bit. I do think that if the merge goes smoothly, you may see kind of a relief, right? And I think the whole crypto sector is kind of a little nervous here too, because if somehow it gets messed up, that would be bad for the whole crypto sector. I think it will go smoothly. I think that's why they delayed it so long, to make sure it goes smoothly. And so I think afterwards you see a very short-lived kind of sigh of relief. And then I think all eyes start turning back to risk assets. What's the Fed doing? What's the dollar doing? What's the global economy doing? And that will be in control again. So I think this is kind of a narrative changer just in the short term. But I think, again, eventually after it, you'll see a resumption of whatever risk assets are doing. I'm still optimistic. So go back to the beginning of this year. I honestly thought we would be above 2,000 by now already. I think I had an end of year price target of 2,400. So right now that's not going to happen, right? I mean, it's just the dollar is too strong. It would take a big dollar collapse in a very short period of time into year end to get us to that level. Having said that, there's no denying that you still have this bullish consolidation pattern on the gold chart. So what you can clearly see here is you have this bigger move to the upside, and then this is all sideways chop. And eventually this should lead to a breakout. So I do think we could be close to 2,000 by the end of the year. I love the fact that this lower level is holding. If the dollar is getting near a high, which I do think it's kind of getting near a major top, then I do think gold will be an outperformer towards the end of the year. It's hard to imagine it getting through this double top high into year end. I think next year it does, but into year end, probably not. So I think, again, close to 2,000 by year end, you still think about, and then look for that bigger breakout next year. And I think that bigger breakout will be accompanied with a realization that the economy has weakened so much, but inflation is still higher than 2%. But as the economy weakens more and more, the Fed can't tighten anymore to control inflation. And eventually, I think the Fed will even go back to lowering rates and printing. But that'll be down the line when things get really, really bad. But all of that, I mean, right now, the Fed is talking a strong game. So it's kind of keeping that pressure on gold and keeping the dollar strong. The Fed will have to back off from that chatter as the global economy and domestic economy weakens. I think for me, it's been more of a nimble market. So there's still a lot of trading opportunities, but I'm recognizing the quick moves in this market. And so I was long a few tech stocks over the last few days. I've been unloading those, and now I've actually started to short the S&P and the NASDAQ a little bit here after such dramatic near-term gains. But for me, it's much more of a very short-term swing trader mentality, where eventually I think the NASDAQ and S&P are going to break sharply lower. We're going to take out the June lows, maybe by year end even. but there's going to be so many of these crazy whips up and down in the near term that it's much more profitable to kind of play them the ups and the downs. So